There's a lot of noise around enCore Energy right now, ticker symbol EU. The stock has started trending in chat rooms and across retail investing forums, and I've noticed people are treating it as either a massive opportunity or a trap waiting to spring. So I wanted to look into it, just to understand the story myself. No hype, no fear, just curiosity, and a little caution. The most obvious reason for the recent buzz is performance. enCore recently reported full-year revenue of $58 million, which is a 163% increase over the prior year. That's not a typo. It's real growth, and it's coming from the sale of 720,000 pounds of U3O8, uranium concentrate, at an average realized price of just over $81 per pound. That pricing reflects the strength in the global uranium market right now, and enCore is positioned as one of the few US-based producers actually bringing uranium out of the ground. And that's important, because nuclear is back in the headlines. Between energy security concerns, decarbonization targets, and the limitations of renewables for baseload power, nuclear is being taken seriously again. Governments are extending the life of older plants. Others are restarting projects shelved over a decade ago. And new investments are flowing into both large reactors and small modular reactors. All of this supports long-term uranium demand. enCore has been expanding in anticipation of that demand. Their Alta Mesa plant recently launched a second ion exchange circuit, effectively doubling its capacity to 5,000 gallons per minute. That's a real operational move. It shows they're not just sitting on assets waiting for a bull run. They're actively trying to scale. The company also continues to highlight its portfolio of in-situ recovery assets across Texas and its intention to become one of the largest domestic uranium producers. So the narrative is strong. But here's where it gets complicated. Despite the positive production updates, enCore is now the subject of a class action lawsuit filed in the U.S. District Court. The suit alleges that the company made false or misleading statements about its financial reporting and internal controls. The class period covers a year, from March 2024 to March 2025, and shareholders have until May 13 to join the action. Now, lawsuits like this aren't unusual for fast-growing or speculative companies, but they still matter. They often indicate cracks that institutional investors were already worried about, and they can distract management, hurt trust, and delay future deals or financing. And then there's the recent announcement that enCore will be divesting some of its New Mexico uranium assets, namely, the Crown Point and Hoster Butte projects. These aren't minor assets. They are part of a package being sold to a new entity, Verdera Energy, in exchange for 50 million non-voting preferred shares. enCore will own 73% of Verdera by value, but not by control. To be fair, you can argue this is strategic. enCore may want to streamline operations and focus on Texas, while still maintaining exposure to future uranium development in New Mexico. But to others, it looks like they are moving key projects off the books, and giving up control while doing it. The structure of the deal, non-voting shares, makes it feel like a financial maneuver rather than a move rooted in operational clarity. It raises the question, why now, and why this way? And that leads us to the current market activity. EU shares are sitting around $1.16. They've been bouncing between $1 and $1.30 over the past month with heavy volume, millions of shares traded daily. That's a sign of heightened interest, but not necessarily conviction. Retail investors are circling the stock. Some see a breakout coming if uranium prices continue to climb. Others are treating it like a swing trade, trying to catch momentum before the music stops. But if you look at the message boards and forums, it's a mixed bag. Some posts highlight the expansion efforts and revenue surge. Others point directly to the lawsuit, the asset spin-off, and the risk of dilution or capital issues down the line. A few are even speculating whether this is another classic news pump before a capital raise. It's not hard to imagine, because in the world of junior miners, and especially junior uranium companies, raising capital is a constant reality. The economics depend not only on uranium prices, but also on investor sentiment, and sentiment is shaky. What I'm seeing here is a company that's actively trying to grow into a bigger role in a sector with real tailwinds, but also one that's facing real headwinds of its own. They've got a good story and actual revenue growth, but the shadow of legal uncertainty, structural deals that reduce transparency, and fast-moving stock action make this a very mixed signal. If you're a long-term investor who deeply understands the uranium space and believes in enCore's production capabilities, maybe this is a buy-on-fear moment. But if you're simply chasing the ticker because it's trending, this might not be the right setup for you. Not until the lawsuit is resolved, not until we understand the full implications of the asset transfer, and not until we see whether this company can maintain both operational discipline and market trust moving forward. For now, I'm staying curious, but cautious. There's potential here, but there's also noise. And in markets like these, you want more clarity than confusion. enCore might still shine, but the spotlight right now is just as much about what's going wrong as what's going right.